Have you ever noticed something strange? Someone wins $1 million, maybe it's the lottery, maybe it's sports betting, maybe it's even the casino jackpot, or maybe it's a massive gambling streak. And for a brief moment, their life completely changes. But then something shocking happens. Years later, many of those same people are broke again. Some even end up worse off financially than before they won the jackpot. So what really happened to these people? How can someone go from having millions of dollars to having absolutely nothing? Today, we're going to be talking about why gamblers often lose their fortunes and what separates temporary money from lasting wealth. So first and foremost, most people think that money solves all of their financial problems. But money doesn't solve money problems. Money actually amplifies habits. So take for instance, if someone has poor financial habits before receiving $1 million, guess what happens? Those habits don't magically disappear. That's why having money and keeping it is a mindset. So essentially the money simply gives those habits way more fuel. So just think about it for a moment. A person who struggles with discipline before becoming wealthy often struggles with discipline after becoming wealthy. The amount of money may change, but the behavior often doesn't. One of the biggest dangers of gambling wealth is how it was acquired. So the money arrived quickly, without any years of effort, without any years of learning, without any years of discipline. And because it arrived quickly, many people subconsciously believe it can be replaced quickly. This creates a dangerous cycle. The person begins taking bigger risks, making more emotional decisions, chasing another big win, and they may not be able to replicate that big win. So instead of protecting that money, they continue gambling with it. The same mindset that created the fortune often destroys it. So another common mistake is confusing wealth with spending. When many people receive a large amount of money, they immediately begin upgrading their lifestyle. So what that would look like is new cars, luxury vacations, designer clothing, you name it. And while none of these things are inherently bad, they don't usually create more money. So essentially, all of these things I'm naming may fall into the category of liabilities. Assets create more money. Liabilities take more money out of your pocket. So examples of assets include stocks, bonds, ETFs, REITs or real estate investment trusts, businesses, real estate, etc. So the wealthy often buy assets first. Many gamblers usually buy liabilities first. Over time, that difference becomes enormous. Here is something most people don't want to hear. Gambling is generally designed to transfer money from players to operators. So the longer somebody plays, the more the probabilities often work against them. That's why casinos continue building billion-dollar properties. That's why sports books continue growing. That's why lotteries continue operating. The system is designed to generate profits, and many gamblers eventually convince themselves they are one big win away from all of their problems. But often, they are simply giving back their previous wins. So I want to be very clear about something. Gambling and investing are not the same thing. A gambler often hopes for a quick outcome. An investor focuses on the long-term process. A gambler may ask questions such as, how much money can I make this weekend? Whereas an investor may ask, how much wealth can I build over the next 20 years? A gambler often seeks excitement. An investor seeks compounding. One relies heavily on chance. The other relies heavily on time, discipline, and asset ownership. Many lottery winners experience a similar problem. Their financial situation changes overnight, but their financial knowledge doesn't. And then suddenly, they're managing millions of dollars without understanding investing, taxes, wealth preservation, risk management, asset allocation, all without a plan. And unfortunately, without a plan, money can disappear very fast, which is why financial literacy becomes so important. People who keep wealth long-term often focus on three things. First is protecting capital. The second is buying assets. The third is allowing time and compounding to work. So instead of investors asking, how can I double my money quickly? They often ask themselves, how can I keep and grow this money for decades? That single mindset shift changes everything. So the truth is, getting rich and staying rich are two completely different skills. Many gamblers mastered the first. Very few mastered the second. Because lasting wealth isn't usually built through one lucky moment. It's usually built through financial literacy, discipline, asset ownership, long-term thinking, and to be consistent. One thing to remember is that money comes and goes, but knowledge, habits, and mindset often determine whether wealth will stay. If you enjoyed this video, make sure to like, subscribe, and continue investing in your financial future. Because financial freedom isn't about getting lucky once. It's about making smart decisions consistently over time.